Welcome to Mongo Spaces. This Wednesday evening, I want to discuss the I&M Bank MTN. We hosted the CFO, I think, a month and a half ago, and I'm glad to have you back, definitely, for another conversation. This time it's around the MTN at the medium-term note. So we're going to break it down. We're going to start with just a simple analysis of what an MTN is. We're going to flow into just understanding the basics of this MTN program itself, the tranche itself, the pricing, the dates, and by the end of it, you should have a really broad overview of the MTN, and we hope that you will be able to invest in it. David, perhaps you can just remind people who you are and the institution which you represent, which is I&M Bank, and also give us a broad overview of the bank itself.
Thank you, Eric, and good evening, listeners. Happy to be back in Spaces again, chatting with you this evening. My name is David Gata. I'm the Group CFO for I&M Bank. I&M Bank is an institution which is one of the tier one banks in Kenya, but it's a banking institution that is in 5 countries. We are in Uganda, Rwanda, Tanzania, Kenya, which is a home country, and Mauritius, where we do have business as a joint venture through Bank One. As I've said, we've been around for over 50 years, one of the tier one banks. Our banking business is primarily corporate, but about 5 or so years ago, we journeyed into retail and business banking, as well as expanded into other financial services offerings, such as wealth management. And very happy to be your guest this evening, Eric. Thank you.
You've introduced the group as a whole, but I think to place in context where this MTN lies within the group capital structure, you can just take us through a broad overview of how our banks, and specifically I&M's bank's balance sheet looks like. Just a broad overview of that so that we can place the tier 2 capital somewhere along the way.
Although I've broadly overviewed the I&M as a group, the MTN is being issued by the Kenya Bank subsidiary, which is I&M Bank Kenya Limited. This is a beginning or an initial business, the one that started in 1974. And then about 2019, we entered into a group structure format where we had I&M Group come and become the holding company for I&M Kenya. So in terms of I&M Kenya, it's a tier one bank within the country. With the total assets as of close of last year when we last met, Eric, of over 450 billion Kenya shilling. Those assets primarily represented about 50% of that, about 230 billion in loans, and about 170 as of December numbers in investment in government securities. And then we do maintain enough assets to meet our daily liquidity need. And then on the funding side, we are very well supported by our depositors who have given us deposits of close to 300 billion shillings. And then we do have shareholders funds of about 70 billion shillings. And then we have supplemented that as of December with the tier 2 subordinated debt. What we have right now is a tier 2 subordinated debt from IFC, which is one of the development financial institutions supporting us, of about $50 million. Now we're in the market for 10 billion with a greenshoe option of 30%. So we may end up, depending on the level of subscription, which we hope will be successful, garnering 13 billion shillings.
So give us a bit of an explanation. What are the basics of an MTN? What's an MTN program and how does it differ from a bank loan, a customer deposit, or a government bond? What is an MTN in basic terms for someone who's listening to us for the first time?
Okay, so yes, the banking business is a business of intermediation. And what I mean by that is we collect savings from savers and provide that as a capital to businesses or to borrowers. And that is the whole genesis of intermediation. So I've spoken to a balance sheet of about 450 as of December, and then explain the various pieces. So let me start with solvency. So for a banking institution, we have to have what we call core capital. Core capital is really those funds that belong to the shareholders. So you can think of that in layman terms as shareholders funds, which is about the 70 billion that I speak to. And then our biggest source of funding is depositors funds, which is about 300 billion. So depositors, they have under trust, they place their funds with us. These funds are some of them short-term in current account, savings account, and some of them a bit longer term in 3 months, 6 months, 1 year deposits. And that's really where we will see term deposits extending to. Now, as part of capital optimization, one of the things that we have to look into is how much debt capital we can have in our funding structure. And this is where the MTN comes in. So we can take the debt capital as a senior debt, which would be more or less rank in the same place as depositors or just slightly behind depositors. Or we can take then what we've come into the market for, which is a medium-term note, which is a subordinated note. And really the nuance for that, and let me first explain what it means to be medium-term. A medium-term is anything about 3 years to about 8 years will count as a medium-term. That can be extended sometimes to 10 years. And then the question of subordination comes in because one of the critical elements that the regulators will look at is an element that they call the total capital, which is basically shareholders' funds or the core capital plus debt that is deemed to qualify as capital. And that number is important because it's what drives what we call the single obligor, meaning how much we can lend to any big customer, which is limited to 25% of that. So it's important for a banking institution to supplement its capital structure through supplementary capital or subordinated debt. And that's where then the question of subordination comes in, which it means this debt stands just before shareholders' funds in terms of liquidation preference. But then from an investment perspective, I would like to assure all the listeners then, and hopefully we'll talk about the issuer, that the issuer is the risk of the issuer going out of business or the liquidation event happening within the time this debt is going to be outstanding. I would probably term that as very low.
Some people have been hearing subordination and they feel like it's something negative. Maybe you can explain a little bit that in context, just to simplify. Usually subordination does not mean that it's worse than anything else. It's just ranking big. It's not a value judgment on the MTN itself. Could you explain a little bit?
So yes, the element of subordination would come in if the institution ran into liquidation where then the assets of the institutions needed to be sold to settle the creditors' claims. Then we'd have the preferred creditors. In terms of ranking, I think the solvency laws are very clear who ranks where. So KRA and the taxman and all of the statutory obligations get a preference. Then the savers, in this case, the depositors and the deposit protection fund standing behind that. Then after that, we go to the unsecured debt. And then we go to then the subordinated debt before shareholders can get anything. Thinking about it, that's the legal way, but thinking about it differently then, to the extent you assess, and I believe most of the investors here or most of the listeners here would assess that the bank will be a going concern 5 years from now, 10 years from now, being a tier 1 bank, then the element of subordination really is neither here nor there, and it's not a new element. As I've pointed out, for instance, sophisticated investors such as IFC, they do actually specialize in providing subordinated capital to banks, and they've done that very well for a long time to financial institutions in Kenya.
Thank you for clarifying that. And Lambert, you've joined us now. So perhaps you can take this chance to introduce yourself, your role at SIB, and SIB's role as arrange and placing agent for this MTN program. So just want you to introduce yourself, tell us a bit about your role and SIB generally, and what do arrangers and placing agents mean? What's there to arrange and what's there to place?
Thank you, Moka. I work for Standard Investment Bank. I'm also a director at SIB. Here, I wear two hats. One hat is the arranger's hat. The other hat is also the placing agent's hat. I will start by first actually saying that this issue is one of its kind. I don't think we've had a medium-term note or a corporate bond issuance from a commercial bank recently. The last one was from some time back. I think the recent ones we've seen are probably just, we've seen one from EABL and we've seen one from Safaricom, but the EABL one being the most similar to the issuance that I&M Bank has brought to the market. The medium-term note, this particular one is a 5.5-year note, and there was also some reason as to why that specific duration was arrived at. Mostly, the market actually was crying out for an issuance that was targeted towards that duration or maximum maturity period. So as an arranger and placement agents, your work is actually to really come up with the information memorandum, guide on the pricing, guide on the quantum, guide on the timing, and generally also go to CMA, NSE, seek all the approvals. And as we speak today, all those, by the time you come to the market, you should have ticked all those boxes. This bond is approved by CMA, approved by NSE, and basically ready for market to offtake. The notes opened on the 30th of April. They will close on the 15th of May. And therefore, I would urge everyone as investors to actually come in and partake of the same, because there is a lot of demand, and we are pretty sure that the issue will be a success.
You've given a couple of dates that people need to keep in mind. So from a broad perspective, what are the key details that people need to pay attention to in the information memorandum about the MTN? So just to reiterate again, what's the figure they have in mind? What's the green shoe option and what does that mean? And also what are the rates and the dates that people need to keep in mind for that? We have a bit of a lag with Laban, so perhaps we'll switch to you today. Maybe you can give us key details about the MTN program that our listeners and investors need to keep in mind as they invest in it.
So the program is a 3-year program, which is for 20 billion. What means is that, as Laban has articulated, we've prepared the investment memorandum and all of that. And we see in the 3 years, we've gotten the regulatory approval to come and raise 20 billion. Now, what we are in the market for, it's a part of the program. So we are raising 50% of the program amount, 10 billion, as part of the first tranche. And within that 10 billion, we opted to include the green shoe option, which is green shoe means that if they offer or if the issue is oversubscribed, we can retain or we can take more than 10 billion to a maximum of 30%, so another 3 billion. So in totality, then we can get 13 billion from this issuance. It's 5 years, 6 months in duration, and it's paying a fixed rate of 12.2%. The key date is that we announced the issue on 30th of April, and this will run until the 15th of May. And then the settlement date is the 18th of May. And we anticipate after that, the issue will be listed at the Nairobi Stock Exchange, and it will trade in the secondary market starting around 21st of May. Another key date I would point out is interest payment date, where interest is payable twice per year, beginning on 16th of November for the first interest payment and 6 months thereafter all the way through maturity. Then a last element is a minimum subscription, which is 500,000. And then once you have that, then you can subscribe in multiples of 50,000. So 550, 600, 650, and so on and so forth. I think those will be the key elements of the MTN note.
Starting with the last bit about 500,000, some Wananchi perhaps might complain that 500,000 is very steep for them. Should they band together in a chama to be able to raise that? What can you tell them?
Yes, and as Laban was saying, there are a lot of these elements, they've been carefully calibrated, and following the likes of yourself and others in the market, it seems the collective investment schemes have really picked up, and therefore for someone who is probably then doesn't have the 500,000, then they can get in that way. But one other element where you're fully convinced that the Wananchi is not left behind is that once the note list, so the note denominations is 50,000. So once the note starts to trade at the stock exchange, then you can go and buy 1 unit, 2 units, 3 units, and therefore at that point you're able to then enter in at the 50,000 element. So that was the thinking behind this, and we had sounded the market, working with our advisors on this. And so far, I think the advisors would speak to this better than me, but getting a lot of excitement and appreciation of the thought process there.
You're almost done with the Imara 3 strategy. How does the MTN program fit into Imara 3 and Imara 4 that is coming up in that context?
Very good question. So Imara 3 runs its course till the December of this year or the end of 2026. But then that gives us a lever or one step. It's a strategy is a continuum of execution. So although we haven't announced or come public with the key themes of the next strategy cycle, you can be sure it will be building on our past successes. But where does this come in? The one thing is what we are seeing within the general economy, the recovery in the credit to private sector. This has moved from just 0.2 percentage point in January of 2025 to where we are 8.1 percentage point as of March. And then even with the elements of the war in the Middle East, the economy continues to expand and credit continuing to expand. And this then, irrespective of the strategy cycle, we do see an opportunity where there'll be increased demand for credit, and we want to play into that and be able to support our customers. So it does play into that. And then the next element, I did point out that we have a subordinated debt as of today by IFC, which is a US dollar 50 million debt, which will be maturing in 2028. And this positions us in a way to have raised this capital, have it already deployed and working for us by the time the IFC debt becomes due and payable in March of 2028.
And Laban, from SIB's perspective, what gave you confidence that the market had enough appetite for this subordinated banknote at this coupon and at this point in the interest rate cycle? If you can tell us that, and also tell us how you work with I&M from the conception to now working with them to the point now they come to market and announce the deal. So you can give us a little bit of flavor there to the best extent you can.
It's actually been a journey close to a year. Working with I&M, working on these issuance, you have seen and we have seen that the market has been ripe in the last few years for similar issues. We've seen a dip in the interest rates. It's a good time in the credit markets. We took a lot of encouragement from the EABL, the Safaricom bond, and basically also the performance of the secondary trading of the government securities. We've seen oversubscriptions in virtually almost all primary issuances that have been there recently, including one that was there that closed this week. So meaning the market is liquid, there is money looking for a home, and there's a lot of attention in the capital market products currently and in the recent past. The government has done a lot to support the market also in terms of shining a light on the NSE products and also the capital market products. So in terms of arriving at where we are today, there's a lot of work that goes on, especially in terms of arranging. I think I would like to speak especially on, I've seen a lot of maybe inquiries about the coupons, the interest rates, or maybe the yields on bonds and how you arrive at that. Maybe the one thing that you need to appreciate is that the reference point for any issuer is normally government securities as being the risk-free securities. We actually benchmark on where the government is a similar issue or tenure is trading or is trading at. Then we add a margin or to compensate for risk. And that's how normally you price a bond. Our reference, of course, we have the NSE yield curves, which normally guide on where most papers are trading at, and we go with maybe benchmarks. These are 5.5-year bond. So just to give you a bit of maybe the example is EABL issued a 5-year last year, I think in November. The 5-year bond was issued at a coupon of 11.80. Since then, we've not had other issuances. So the only other things that have gone through, who you go by is what is in the government space in terms of government securities.
I just wanted you to emphasize, especially to anyone having questions about pricing, that this is appropriately priced for the risk and for other benchmark notes in the market, and especially the government bonds. Could you reiterate that point a bit so that people understand it better?
Moka, thank you very much. I can't emphasize enough more on that point, like what you just said. It's a science. There's actually a lot of research and a lot of analysis that goes into it in terms of arriving at a coupon, arriving at a price of a bond. Like I mentioned, you take a government security as a reference point, and then you actually now add a margin or to compensate for risk. And at our current pricing, we've actually sufficiently covered that and compensated the investors for the same. And that's maybe mainly the reason why we are seeing good interest and good appetite for the same bond.
And so far, as you said, what's the feedback from the investors that you are pushing the MTN to? What have they told you?
The market has been very positive. The market is excited. From last week, we've had a lot of engagements with investors, mostly institutional investors. There's a lot of commitments coming in, and we generally are very content and happy with what the feedback has been from the markets. And of course, I&M Bank is a tier 1 bank. It's a name that sells itself. It's a bank whose profitability has been phenomenal. We've seen them grow from strength to strength. So we are actually very confident in terms of how the issuance will perform.
Thank you, Laban. Back to Derek, I want to talk about use of proceeds, lending priorities, and where you deploy this cash. So if the investor is putting in their 500,000 to this MTN, what are you going to do with it after that? I think that's a key question. And what does I&M want to do with its capital at this point in the strategy cycle, and what becomes difficult or impossible without that?
Yes, so we'll be deploying these funds for lending growth. That is clear in our information memorandum. I did speak to the total capital and the fact that for the bigger corporates, we are able to support as a bigger single obligor limit. There is also the element around this is money that is going to be with us, funding that is going to be with us for 5.5 years at a fixed rate. And what that does is allow us then to be able to give our borrowers a longer tenor because we have certainty as to this funding. And as I articulated before when we met in March around our strategy, we have been growing our retail and banking business, which now contributes 40% of our revenues. We do want to continue to grow that business. We won't forget about our corporate. It's going to be supporting holistically all of our customers and all of the economic sectors that we play into. We anticipate, as I started on, that there's going to be strong credit growth within the economy, and we want to be playing in that growth.
I think it's been a bit of a tepid lending environment generally for banks for the past couple of years. Do you see a little bit more appetite for loans when you talk to clients? Are they more of on a risk-on mode that they want to take up a bit more debt to be able to finance their businesses and their personal lives themselves? What are you seeing as regards that? And then secondly, there's an equity investor perhaps who saw you pay dividends at the end of the previous year, and they now is wondering why you back to market to seek an MTN. How do you reconcile that in terms of debt versus equity and financing and your optimal capital structure as you look at it?
Two good questions. Let me start with the lending environment. I would say it used to be, as I did point out, credit to private sector. Actually, as we were closing 2024, that was shrinking. It was negative growth. I believe in the number for December 2024 was negative 2.9%. So where we are, latest numbers, and these are industry numbers by the central bank, and the latest MPC report, that growth to credit to private sector is 8.1%. So as Laban pointed out, we have seen the interest rate easing cycles continue. And what that will mean is for all of the investors, if you have a project or we have an investment you're thinking about, you will have your handle rate, and your handle rate is driven by your cost of capital. And when debt capital is high, when the rates were higher, there were some good projects which would qualify if the rates are lower. And those projects that we can see the investors having the confidence to approach us for financing for that. And that's where we want to play to that. That's one. Then the second question, the dividend, that's an important question too. So as part of capital optimization, any corporate out there will have debt, which has its own cost of capital, and we have equity, which has its own cost of capital. Remember, equity, there is a residual element of cost of capital. Therefore, the cost of capital for equity tends to be a lot higher than debt. And therefore, to optimize, that's when the debt element is concerned. But that's where the debt element comes in. Now, but to think about this is we'll always pay dividend and we'll continue, and we have a dividend policy. Our dividend policy allows us to pay at least 30% of our earnings out to shareholders. And the fact that we announced that dividend doesn't mean it would have been suboptimal capital management if we had used those proceeds, forgone the opportunity to complement our overall shareholder funds with debt capital. And as I've pointed out before, today as we speak, we do have 50 million of capital in USD of subordinated debt. Prior to this, in March of last year, we did pay out another 27 million of subordinated debt in USD. That was actually a medium-term note, but that was USD denominated. And therefore, if you're to look at our balance sheet and see how much subordinated debt we had, it was about $78 million. And $78 million, using today's exchange rate, works out to be just about 10 billion. So all we are doing is making sure that our balance sheet and our capital structure is calibrated to the right levels of debt to be able to replace what it is that we've already paid and what will be coming due for maturity in 2028.
Thank you. I want to turn to Laban a little bit. Perhaps in terms of application now, what do investors need to do? Where can they go to make this application for the MTN? What documents do they need and how can they make the payment? So perhaps a bit about that, and also give us a bit of flavor about the application process, the allotment, settlement, and perhaps finally trading. So take us through that journey a little bit. Laban.
So in terms of the application process, it has really been simplified. And of course, in the digital era, so we have a link that you actually just click on it, fill in your details, and it's submitted, and it actually goes in as an application. So it's actually pretty straightforward and very simplified. For the clients who prefer physical forms, you can come to Standard Investment Bank. We are Jekwa Tower, 16th floor. We'll guide you with the process and fill in the form for you and assist you, and actually then just process the whole documentation thing and requirements that are required from you. But it's pretty straightforward, really.
After that, what happens?
After that, it's actually just to actually wait. It closes on the 15th of May. And then there will be the process of allotment. And then the settlement date on the 18th of May is when all the monies are collected.
And then the green shoe option, tell us a bit about it. What does that entail if you apply and there is more applications than what you had in mind?
Oh yeah, good question actually, because what tends to happen, assuming we get maybe 20 billion in terms of applications, and we can only maybe take a maximum of 13 billion, it will mean that it will be prorated and each investor will get an allocation based on a pro rata basis.
And then about the tranche 2, that's not decided yet, perhaps for David, but maybe you can tell us a bit about where you're thinking in terms of when you'll come to market again for the rest of the money, the 10 billion that is. When you come back, if you already take the green shoe option of 3 billion, will you come back for 7 or for 10?
If we have a green shoe option, then we'd come back for 7 because the entire program is 20. Now, when we come back for that, I think we'll assess, as Laban indicated, that we've been on this for a period of time. So we'll see how much credit growth we've realized, where our capital position is, what else is happening in the market. There'll be those considerations to be made around the timing. So I think very hard to answer that question and give a good indicator to say 6 months, 12 months, 18 months down the road. But just for the investors, for the time being, to know the tranche 1 is available and how we're using it. And as Laban has articulated, the consideration of pricings that were made and how competitive that is. And then at the appropriate time, we'll announce tranche 2.
Oh, we do not expect it, but what if you fall short of expectations? Is there a minimum you have that you would want to have in mind, just in case there is shortfall in terms of the applications are less than the 10 billion?
What normally tends to happen is you give yourself a success rate threshold. Our success rate will be 50%, which is 5 billion, but we do anticipate, of course, to hitting higher than that.
Yeah, definitely. We're hoping for that too. Once they're listed on the market, Laban, what happens there? Those people who miss out on the primary market, what can they do in the secondary market? And what's your role there also?
On allocation and allotment on the 18th of May, based on your allocation, whoever maybe misses out or didn't get a full quantum of what they went in for, then on the 21st of May, when the bond is listed, you can actually walk in or just call us and place an order, maybe to buy. We will go to the market and fill up your order, place your bid, and we'll match the buyer and the seller. So from 21st of May, you're able to now then again go in the market and buy more if you need it.
To you, David, what does a trustee do? Is there a role in representing investors just in case it's default or something like that? Just to reassure investors, in case of a default or resolution scenario, what protections exist for the note holders in that regard?
And that's where the trustees comes in. And this is a regulatory role where really the funds, for instance, when we pay out, when the interest is due, or the trustee will ensure that interest is credited to investors' respective accounts. If there's a trade, the trustee will ensure that the registers are updated around which investor is holding what. And really, this structure is there to afford the investor that protection. If we were talking about what would happen, they will have the full record of who the investors are at any point in time, and they will then be tracking and working with the I&M to make sure that those dates and any obligations are honored.
David, in terms of asset quality and how your balance sheet looks like, could you reiterate to our listeners the position of the bank, especially after the FY 2025 results, just to reiterate for those who missed out? And then secondly, are we expecting the Q1 26 results coming up soon? I'm sure you can't comment about it, but you can just tell us a bit of what you're seeing to the greatest extent that you can speak about them.
So let me talk to 2025. I guess by asset quality, you mean really our level of NPL, where as of end of December, non-performing loans were at 13%. This was about 400 basis below the industry. And if you recall from the discussions that we had when we had the earnings call, that 13% was an improvement from where we had been the year before at about 14%. And in both ratio terms and absolute terms, we have seen our non-performing loans are continuing to decline. Now, in terms of our asset, I think I covered it overall asset because this is important, and to the questions that have been arising around subordination, but just to speak to the solidity of our balance sheet overall, is that we have 450 billion in total assets as of December. Yes, about the non-performing loans that I've spoken to, 13% is out of the 230 billion or so that we have in lending. So we are talking about 30 billion or so, approximate. I think the actual number is about 29 billion. But then the rest of the assets are in cash and government securities. And you'll have seen us reporting liquidity ratios of about 55 to 60% range every quarter. And that does speak to then the assets that will be available or that are available, one, to meet our day-to-day obligations to our depositors. But also when we talk about this debt being subordinated, then the thing is, what are the types of assets that stand behind these? So in totality, then I'm trying to assure the investors here, out of 450 billion, our non-performing loans is only 30 billion, which if you take it as a percentage of the total assets, then that's less than 10%. If you take it as a percentage of loans, it's 13%.
Back to Laban now, and as we close, a few key details that you want investors to remember about the structure pricing, risk pricing, and dates of the MTN. And then after that, I'll come back to David. For those who are on the fence, what he would advise them about joining in I&M's growth agenda before the offer closes. So first to you, Laban, give us the key details that you want us investors to remember. And then to David on joining the I&M Bank's growth agenda.
From where I sit, I think it's very important to just apply a bit of emphasis on the issuer, to remember that the issuing entity here, I&M Bank, is one of the most solid banks out here. I think at a price point of 12.2% return, which is paid semi-annually, that's a very attractive return. Your money is safe, you can bank on it. I don't think there's any other issuer or currently in terms of quality of the corporate papers that I can compare this with. I would say that please go all out and put your money on it.
Reiterate the key details, Laban.
The key details again, the first thing is just to remind everyone, it's a 5.5-year note in terms of tenure. It matures in 5.5 years. In terms of the date, I think everyone has to keep in mind that it closes on the 15th of May, but also just to know that if we attain the quantum earlier than that, we will actually just go ahead and close it. So I would say the investors need to move with speed. Don't wait for the last minute and next week on Friday to placing your bids. I think you can do it now, and the end of this week, I would say it's the best time to place your bid.
Back to you, David. Now, in closing, tell people how and why they should join in the I&M growth agenda, and especially for those who are on the fence, what should tip them over to come over to your side?
I think last time I did speak to, especially to the savers value proposition, and especially an Nisare value proposition. I gave you my own testimony that my mobile money fees is usually less than 100 per month. And that continues. And I believe a lot of you listened and acted on that because I've seen new to bank customers are growing. So I think from a personal point of view, we offer you a very solid value proposition as a depositor, as a saver with us. We offer you the wealth management value proposition as well. I did speak to our wealth management and capital business and the way we are able to work with you to create a portfolio that works for you. Now, when it comes to the MTN, which is the subject of the discussions today, I believe a lot of your listeners, Eric, they are part of the investing public, and that's why they've taken a lot of keen interest on this. And there's a place for all types of I think we call them categories of assets, equities, fixed income. When it comes to fixed income, you would evaluate your sovereign exposure, your non-sovereign exposure. And this is an avenue for you to expand your portfolio and get it and have in your portfolio an asset that is going to be paying you this, what we believe a rich rate of interest at 12.2 for the next 5 years with a solid tier one bank, which I think, although we spoke about the subordination, I think, and I asked the question, and especially if you save with us, or because the saving is an unsecured, you've trusted us and given us your deposit, do you think we will still continue being in business? And my unequivocal answer to that would be, I believe so. That would be my pitch to you, and to consider this in your portfolio. As Laban has said, the offer is open until the 15th, and it will really add into your investment portfolio and give you the optionality, a fixed instrument optionality. Thank you.
Thank you, Laban, and thank you, David, for joining us on Mango Spaces today. Thank you for giving us a breakdown of the MTN. We will post all the links that have been mentioned. I will post the note itself, the information memorandum note. I think that should be available soon. I will also post the links where you can also subscribe to it, and make sure that you keep in mind the date is 15th of this month to be able to apply. So you have roughly around 9 days left. But as Laban said, make sure that you put in your applications as quickly as possible, because they might close if they reach the amount that they need. So Laban, David, once again, I want to say thank you.
Thank you so much, Eric. And thank you so much, our listeners this evening, for giving us your time. All of you, have a good night. Thanks.
Thank you, everyone, for listening to us, taking your time. And a special thank you to Mwango Capital. Thank you for giving a platform for financial literacy to carry on and deepening knowledge in terms of markets. We're always keen to also support such spaces, and in future, we look forward to coming back again.
Thank you, and see you next time.